Well, Chinese officials are reportedly considering cutting the stamp duty on stock trades in order to boost the world's second largest equity market. Joining us now to break down what this means is Yahoo Finance reporter Ines Ferre. Hey, Ines.
Hey, Rochelle. Yeah, and this measure would really be a boost for Chinese equities if they were to cut that stamp duty. A stamp duty is like a levy on on stock trades, and this would be the first time that it's cut since 2008. Now, the stamp duty currently sits at 0.1% on stock trades, and a draft proposal is being considered. The Chinese equity market is valued at $9.9 trillion, so it's very sensitive when it comes to any type of shift in liquidity. And the stock market really is a barometer of consumer and business confidence. So the government is trying to boost investor confidence, trying to keep capital flowing into the markets. The Chinese economy and households are going through some major challenges right now. One is falling property taxes. The other is a weak job market. And you had Chinese equities that had a 2-month rally, which then fizzled out. You had global funds that were selling into that rally, believing that perhaps that whatever the Chinese government was doing in terms of stimulus to shore up the economy wouldn't be enough. Now, China's stamp duty is on stock trading has been adjusted several times. It was adjusted, as I mentioned, back in 2008. It was cut to support a market plunge. And in 2007, as you saw a market melt up, as the market was rallying, you had investors, China had more than 300,000 new investors entering the market. So they, at that point, raised the levy in order to sort of cool down that rally.
And another aspect that we're watching, China's seeing a lot of slowdown in employment, especially youth unemployment. So tell us about that latest data or the lack thereof.
Yeah, and the youth unemployment number has really gotten a lot of attention over the last couple of months. You'll recall that back in July, when the GDP print was put out for the second quarter for China, that another headline that came out was the youth unemployment that had skyrocketed at a record high, 21.3%. That's 1 out of every 5 young people in China that were without work in June. And now the government is saying that they are going to pause giving out the youth unemployment number on a monthly basis. Young people, by the way, is defined by 16-year-olds to 24-year-olds. And the Chinese government is saying that labor statistics need to be optimized. More research needs to be done. They're also considering whether or not to include young people who are in college, who have not graduated yet, and are looking for jobs, whether they should be counted or not. Remember also that in China, many young people do internships. They do internships while they're in college, just like here in the U.S. as well. So whether or not some of those figures should be included. But look, there's been a lot of negative attention placed on this new idea or mandate that they will not be giving out these numbers on a monthly basis, because many are wondering, well, how bad is it? We just had a record high of youth unemployment of 21.3%. Is the government hiding something? Transparency issues that are coming to light. And it is a gauge for how well an economy is doing as far as unemployment figures are concerned. So there's been a lot of buzz around that, but a lot of concern as well that, look, if you have a lot of people, young people who are without jobs, that is a risk to a society as well.
Especially one that has a very high aging demographic as well. You have to wonder what that pipeline means then for the economy. Thank you for that breakdown. Our very own Ines Ferre there.